The economic recovery is going slower than some might hope, but how has that affected how buyout firms are finding value in markets? For his thoughts, I'm joined by Len Tannenbaum, CEO of private equity lender Fifth Street Finance. Good to see you, Len.
Thank you for having me.
Now, what are you seeing in terms of demand for private equity loans? And talk to me a little bit about this interest rate environment we're in and how that affects your business.
So let's talk about the manipulated interest rate environment, which shouldn't be at zero. We have negative real returns. You have the Fed buying 70% of the treasuries as they're issued. So we all know it's not for real. And how do you as a lender, and this is what I do, lend $1.3 billion in assets. So how do I as a lender position that? It's very, very hard because everybody looks at spread over, but it's not a relevant benchmark. So we're really concerned that someday it'll increase, but don't think it's going to increase anytime yet. We're also going to see a lot of inflation, I think, come out of it, and we're budgeting that into the different companies that we look at. Because if you keep the interest rates low for an extended period of time and print $1 trillion of assets per year, there's going to be issues. Now, private equity is having a little bit of trouble because the multiples are expanding because there's too much liquidity in the market, especially for good deals. And that is created by this artificial environment. So I think the Fed's really doing us a disservice, and so is the government, by not letting the free markets take control of supply and demand.
And in terms of loan demand, maybe you'd want to get loans because the rates are competitive, but the valuation makes the potential purchase less attractive.
Right. Well, there's two sides for us, right? We're borrowers and lenders. So we're BBB- Fitch and S&P. So in borrowing, wow, we can borrow really cheaply, which is great. Lending out, we're very careful because we know that with treasuries down, are these the right reward for the risk? And then you have to think about what you think about the economic environment this year and next year in couching how invested you want to be and how leveraged you want to be.
Are we getting ready for any sort of private equity boom in the second half of the year, or are we seeing perhaps that we have already had the best that the year has to offer?
So early in the year, I predicted the biggest fourth quarter ever. The middle of the year, I've softened the prediction as we just haven't seen it.
Yeah.
You know, and I was wrong so far. I'm starting to see the early signs of the pickup again into the fourth quarter. And here's what I think is going to drive that. I think there's a real chance that tax rates go up next year, whether it's Obamacare, capital gains tax, dividend taxes. And that may cause, I'm talking to a lot of companies, whether it's my Young Presidents Organization, which has a number, we each own companies, or our 67 portfolio holdings. A lot of people want to sell this year. And so the investment banks are really getting busy right now in preparation for a big December and November. So again, I'm starting to get optimistic.
Right.
I was wrong early in the year, so I'm afraid to be optimistic too early.
Well, let me ask you about the structure of deals. The equity portion is much higher now than it was in the 90s.
That's right.
So is that a trend that continues? What changes that dynamic?
So that actually peaked out in 2009 and 2010 at about 50% of the overall deal size. To give an example, on a $10 million EBITDA company, you buy it for about 7 times, 3.5 times equity and 3.5 times debt. Today, it's dropping back down. It's about 40%. So we're back down to where we were in 2005. And will that get as frothy as 2007 and pull back to 30%? Well, we'll stop doing deals there. But it's possible.
Now, for some of the portfolio companies and for some of the firms that you're lending to, when they think of exit strategies,
yes.
How is that different now? Did Facebook matter to them, or do some of the macro issues matter more?
So exit strategies, they just look for the highest price, and everything's at auction. Everybody thinks there's proprietary deal flow. There really is very, very, very little. Almost everything even is with an auction with a minor house. And so what that means is it's a competitive environment. And who's buying them you've seen the big corporations have these millions and millions of dollars that everybody has said they've been hoarding on the balance sheet. Well, those strategic buyers are now in the market trying to use up their cash. They realize this cash is going to earn zero, right? So it's all accretive to earnings. They can buy almost anything and it's accretive to earnings. So it's really an amazing idea of how they're going to have earnings growth is by buying the smaller companies. So you're seeing them compete with private equity.
Now let me ask you, as a CEO of a company looking out at the economy,
sure.
What's your view? Are you hiring, for instance, or are you planning to hire next year?
So we've grown a lot. Well, from 15 years ago when it was just me to today where we're 47 people. The last 3 months we've hired 10. So we've gone from 37 to 47. And I think over the next year I'm budgeting plan A, a plan B, and a plan C. A plan A for hiring another 3 to 7. A plan B, plan C. Plan B for hiring a little bit more than that. And a plan A for really continuing to grow at the rapid pace we've grown. And the differential is because we're going to hit this fiscal cliff. And $1 trillion is going to be taken out of our economy. What happens? Are we going to enter a recession next year, which is any prudent CEO has to budget for the downside. And there's some significant downside. There's Israel, Iran. There's Europe, which continues to implode. There's the slowing in China, and there's the fiscal cliff in the U.S. And those 4 items really should add risk. And nobody's talking about them anymore. We talked about them 4 months ago. Amazing how the world's changed.
Well, I hope for our sake, Plan A is what gets executed.
I hope so.
That'll be better for everyone.
I hope so.
Len Tannenbaum, thanks for your time. Good
Thank
to
you.
talk to you. I'm Rhonda Schaffler. This is Reuters.